Hello, everyone. How is everyone doing this fine Monday morning? Super busy trading week. Good morning, John. Good morning, Jacob. Good morning, Sterling. Good morning, Patrick. Uh, Sterling's putting in some minor earnings today. We have the supposed trade agreement with the EU. Why I say supposed? It still has to go through all the EU ratification process and everything else. So they might have made some agreements, but there's nothing written in stone yet. It can all be still not well. It can still be have some issues. But markets are celebrating that again, also with another trade deal. So gapped up on Sunday night. What's this? China and U.S. to extend tariff pause by another 90 days. So, good morning, Ted. What else? What else do we have here? Boeing looks like they're preparing for a strike in St. Louis. I did see that. Good morning, Dean. Good morning, OD Green. Still holding capital. See how this week plays out. Hello, everyone. Let's go into. You just brought it up, OD Green. Let's go into what this week is going to look like because it is a busy one to wrap up July. Today, not so much. We got the Dallas Fed Manufacturing Index at 10:30 Eastern, and then some bill and note auctions tomorrow. Retail inventories, home price index, the JOLTS, openings and quits, consumer confidence, Dallas Fed Services and Revenues Index. Then we start getting interesting. Then it really picks up. So we got on Wednesday, we have the GDP numbers. These are the Q2 numbers. We have the PCE numbers for Q2. We have real consumer spending for Q2. And of course, we have our EIA numbers, but most importantly, we have the Fed interest rate decision, which would shock the markets if it was not a pause. You see here, Fed Watch is still at virtually 97% for a pause. So it's locked in for a pause. The press conference is going to be what's important, especially if they telegraph for September, with the first cut being in September. Also to see if there's any dissents to the pause. That's what's going to be interesting on Wednesday. Thursday, we have the PCE price index month over month for June. All right. And we have, as always, initial and continuing jobless claims. So that is Thursday, the PCE numbers right after the Fed meeting. And then Friday, we have non-farm payrolls for July. Friday being August 1st. So non-farm payrolls, we have the ISM manufacturing PMI. We have the consumer sentiment numbers, the final numbers for June with the inflation for July with the inflation expectation numbers for July. So Wednesday, Thursday, Friday, super busy. EPT chart has a really good example of your favorite pattern on the daily, the wedge. Good morning, Anissa. Good morning, Heinrich. So that's where there's no sleeping in this week. We got to be prepared, and that's before we even look at earnings. We'll take a look at what's coming this week in earnings, but overall, we have chips up. We have the Mag 7 up. We have Nike up. We have energy up. In groups, let's just do a quick refresh here. We have energy leading, consumer cyclical, industrials, technology, all leading. The only thing that's lagging is consumer defensive and basic materials. Again, markets in super rah-rah mode. We already went through this Fed watch for the pause on Wednesday. We're at virtually right again. Greed, extreme greed. This will probably open up in extreme greed. And Schiller PE. Could we top 39 today? Could we top 39? Earnings better be killer with how everything's priced in. We've had beats, but remember, earnings are so dumbed down this quarter. A lot of companies beat. Good morning, Jake. So in terms of earnings, again, not much this morning. After the close, not really much. Tomorrow, UNH, United Health, SoFi, PayPal, Boeing, UPS, Spotify. UPS is going to be interesting with guidance. After the close tomorrow, we got Visa, Starbucks. Wednesday before the open, not much really. Well, we got Kraft Heinz, which will be interesting, but not really market moving stuff. But after close Wednesday, remember Fed meeting, Fed press conference, and then we roll into Meta and Microsoft. Meta and Microsoft and Carfraudna. So Thursday we got Roblox, MasterCard. That's probably the biggest one. Bristol Myers Squibb. But after the close, you got Apple and Amazon. And there's your Coinbase. Robinhood's on Wednesday. Coinbase is on Thursday. Friday, you start kicking off energy with Exxon and Chevron. So that's where we sit. Again, no rest for the weary between releases, between Fed meeting, between earnings, and whatever happens with the administration. All right, good morning, Rick. I think this is a week crude might give it the college try to 70. We will see. We shall see what happens. So, Friday in the S&P closing right at the double harmonics. Gapping up today on a continued sell-off would be a gap fill. 64.25 would be the key level. Again, we had the sideways correction, broke out last week, and continuing higher. We have daily cycles getting to the top area, very overbought. Heading into the week on the weekly, insanely overbought with cycles still at the top. And this is a rarity. This is a huge rarity. So I am prepared personally for a pullback, but it has not happened yet. We don't even have a topping pattern yet besides a gap fill. What I'm going to be seeing is if we pull back and then rotate back up Tuesday and Wednesday to set up more of a topping pattern going into Wednesday afternoon. Okay. So weekly cycles at the top, daily cycles approaching the top. Again, extremely overbought. Going to be interesting to see if the RSI breaks below the little average line right here, which I don't normally talk about, but when it does at this point, we can go into correction mode. Last time it did was the sideways correction. Besides if it pulls back, again, I'm just watching the 4-hour rotation zone. Watching the 4-hour rotation zone if we've beyond the gap fill. That's the first key area I'll be watching for support. And then below that, I'm watching roughly about 64.17 to 64.20 area. That's the next key level. There are no setups with the gap fill. All right. Then once we do that, once we already have the pullback, I am then personally going to, from these highs that we established earlier, I'm going to use whatever the lows are. I'm going to be focused, especially between the 50 and the 62.5, on the bounce harmonics. That should make sense to the people who have been here a longer time. The NASDAQ, again, not yet to the next harmonic. Friday, closing just below the minor harmonic where it stalled out most of last week. Now we have the gap up. Again, very overbought. The NASDAQ is trying to roll over a little earlier. The gap fill on the NASDAQ, first I'm paying attention to Friday's high, which is virtually where we're trading now. That is 23,476. If we break that and then focus on the close, 23,421, 422 area. We'll be using the 4-hour rotation zone, especially with the gap fill. And if we did go slightly below that, about 23,430 to the close of 23,447. That's going to be key right in here. All right. Weeklies, again, weeklies, very insanely overbought with cycles pinned to the top. Overruled a whole cycle drop and back up. So, and remember, we're way overextended from the weekly rotation zone. But besides the gap fill, there is no topping pattern. I will be doing the same thing, watching for the pullback, using the harmonics from the high that was established last night, and looking then for between the 50 and 62.5. I can't call it that level because we don't know where the pullback's going to stop. The Dow, we do have a little mini potential double top unless the Dow trades above 45,338. This is a completely valid mini double top within a bigger potential double top. It is against the bigger one is not against the daily rotation zone. The little one is. But we've already filled the gap in the Dow, and we're headed towards the bottom of the rotation zone. I'm going to be watching about 45,000 to 45,020 going into the open. The double would need a close below 44,818 to trigger. And specifically then I'd be focused really on that first target, 44,610. All right, remember, if this does not trigger and rotates back up above 45,338 is off the table, and then the next major harmonic is 45,478. The Russell also has a little mini double within a sloppier, bigger double. Very sloppier, bigger double, but focusing on the mini double, the Russell has not yet filled the gap from Friday. It came down to close to Friday's high, so that's the first area I'm still going to be watching on a pullback in the open, 2,276. Then the gap fill would be to 2,271. And the only way we get the minor topping pattern would be a close below 2,252.2. That would be off the table. Again, the Russell's holding up the best so far. The Russell's up 52 basis points. The S&P is only up 12, and the Nasdaq's up 25. That mini double would be off the table on a move above 2307.6. Russell also overbought with cycles at the top. So we do have potential mini topping patterns on the Dow and Russell that have not triggered yet. Other than that, we have gap fills. VIX, very minor bump up, but look, I mean, in the scheme of things, very complacent market, especially going into everything that's going on this week. Very complacent. So if you're looking for potential portfolio hedges, you might want to do something with volatility, because anything could shock. That doesn't mean it has to happen, but if you were looking for something, volatility is dirt cheap. The DAX, not much to talk about. Still, same thing I'm watching yesterday, about 24,050. Or I'm going to be watching that on any pullback for potential buy setups unless we close below that. Or key resistance, is up, especially around 24,600 to 24,650. Yields on the 10-year, sort of sitting right here. Again, cycles back at the bottom, but stuck in a consolidation. Now, if we did roll down, we might have, I don't know if the targets would work, but a lot of people look at that as a head and shoulders. So we'll have to even see if that happens before we're going to measure them off. Because otherwise, if we came back down, 4.33 has been very key support. Remember, we have the Fed meeting coming up. Not much reaction to the EU trade deal. The potential EU trade deal. What else do we have? Crude. We do have a mini double here. It looks like it's now confirmed. I listed this out on the newsletter. It looks like it's confirmed, not yet officially triggered. Not yet officially triggered. Not even on the 1 hour yet. So that would be key for a bounce. Don't know if it'll hit 70, but there's going to be major resistance just around the 67, 75 area. So going to be keeping a close eye on that if it does trigger. If it does trigger. Also going to be keeping an eye on this to see if it gets rejected from this channel. That's it. If that breaks down again, Very key support, 64.75 area. If we close below 64.35 roughly, I'm done looking for bullish setups for the time being. Then we follow through with 69. The exact tipping point is 63.96. That tips the probabilities lower. Gold closing below the channel on Friday, not below the 50 EMA. We've held the 50 EMA on a closing basis. Gap down, reversed. I'm watching today how we close in relation to 33.26 to see if the probabilities shift. Now, we could be setting up tomorrow for a %B buy. So we'll have to see how today ends up, which would be a break above today's high. Nothing yet, though. Who else is there? Good morning, Legion Reaver. Sure, I can say what the additional line in the RSI is. Well, this RSI I have up here right now is a 4-period closing basis. This orange line is an MA. It's an SMMA, RMA line with a length of 10, standard deviation 1. All right? There you go. Dollar index, very interesting. Come on, don't lock up on me. All right. There, what did lock up on the dollar index? The dollar index doesn't like me. Big, I was still looking. Again, for the pullback between the 75 and the 87. We've rotated up strongly. I did not have a buy set up here. We had a potential %B buy on last Wednesday, did not trigger on Thursday. Follow through. Now, I'm going to be more aggressively looking for any buy setups on any pullbacks based off this price action. All right. We might get a pause. This is a very strong. So people are still so bearish on the dollar. That's why I'm still looking for setups. We got cycles potentially turning up. Do we need to follow through with the close above the 50? So that's why I'm now looking more aggressively on pullbacks. So sometimes the trade does not come to your zone and you don't get a signal. So now I got to look for a new signal on pullbacks. Euro. Remember, the euro is in potential major double top territory. Not triggered yet. But euro, if it were to close below the low of 115, wait, what is that? 11569. 11569 also be below the 50 daily on the daily. Still would be against the weekly rotation zone, but we could easily pull back towards the bottom of the weekly rotation zone. Very interesting, too. There's a key breakout area here just below the first target, closer to the bottom of the weekly rotation zone. So that's what I will pay attention to. It is not triggered yet. Yen, still back to weakening. Not yet in. I'm still looking for more yen weakness, by the way. Let's see. This is technically in double top territory. Let's see if it works from the conservative patterns, the conservative side. So that was, yes, it still barely works. It does not work from the aggressive side. Well, it's virtually there, but it'd have to be a conservative side. But that's the only thing that would take me out again, weakness. Spiders. Again, we're gapping up. The gap fill is to 637.10. Going to be paying attention on the spiders to the 1 hour rotation zone. 4 hour rotation zone on the futures, 1 hour rotation zone on the spiders. If we pull back beyond the gap fill, the major level is backed by a prior harmonic 636 area. I'm looking for new pausing bars. Right now, the best we can do is go to the pausing bar last Monday. So if we were to break this week and continue higher, 641.45 would be key. All right. The Qs, again, for the gap fill, 566.37 would be for the gap fill. We still do potentially have a double top. It's a very sloppy one now, and it got close to being invalidated on Friday. If it trades above 567.92, it's no longer in place, and we're not anywhere close to triggering it. Beyond the gap fill, if we do continue back lower, the major, not for today, this would be a long way off unless something happened, but about 564.25 is a very key level, also right around Friday's low. Good morning, Kevin. Yeah, the dollar index is growing. Legs, you are welcome, John. So, Coco's in gold to 2,600. Gold to 2,600. Well, before we got gold to 2,600, Coco, we would have to break below some pretty major support, and gold would definitely have key support at 3,000 well before 2,600. And you get some substantial bounces along the way. So, there is a ton of support in here, and we have not triggered any kind of major topping pattern yet. If I was going to shoot for a breakdown play, if we did manage to get below about 3180 again, key target for me would be 3,000. What else? Bitcoin still caught in the channel. Nothing to talk about. Now I'm watching 120. We got a mini little fake breakout here that came back down, still holding a rotation zone. I'm either a breakdown play or a support play against 116,500, or a breakout or a key resistance play above 120,300. Would not be looking to sell against 120,300. That would only be really a breakout play. Would be willing to buy against 116,500 area unless we close below it. And if I bought there, it would be a very tight stop. What else do we have? What else was listed earlier? Sterling, you had something in here earlier. Then we'll look. What was it? EPD. EPD. What did... You said it was a wedge. I don't see a wedge there. I see a triangle. See, all right, remember we talked last week why I don't like triangles? I'll give you another. This is a good example. Okay? This is a good example of a triangle. This is what makes them challenging to trade. All right? This is exactly what makes them so challenging to trade. So here's your triangle. Let's say you break above it, because triangles can expand a bit too. You break above this top of the triangle line. You got a key stopping point at 32.23. You got another key stopping point at the initiating point, 32.67. Only above there does it really confirm breakout. Because could it break out the triangle and slam into any of these areas and still be in consolidation? Yes. To the breakdown side, you have the lower end, especially as this keeps going to the right. And then you have key support at 31.11 area. Then you have key support at 30.68. Even below there, you've broken out of a mini support, but you have major support back at 29.95. So this makes getting reward to risk and planning out a trade very tough. Because at any of these key levels, they could still reverse. So many of these can even reverse, like break out to the upside and still stay in consolidation and just be a technical triangle redraw. This is a great example. So for me, it gets real challenging because let's say we break above here. My stop technically has to be below this 31.11. But where do I can't use a target all the way up here because there's too many stopping points. There's too much stuff in the way. That could be resistance. We could sit in this just an expanded range for a very long time. That's why I don't like triangles, because they're notoriously hard to trade. And it's very tough to properly get your reward to risk with proper targets and stops. And this is nearly 50-50, whichever way it's going to resolve. So I don't even have a bias. Okay? I don't even have probabilities like a 60-40 or 70-30 probability bias to one way favors the other, which could help with trade expectancy. That's why this was a great example. Not a wedge, but a triangle. I think you probably just mistyped that, Sterling. This is why I don't stress trading these. Now, if we get a momentum breakout with a follow-through close, that's a different story, because then we have a momentum break from a consolidation range. Then generally I look for pullbacks to some of these key areas and an entry. Let me know if that makes sense. No. Okay, no, this is a triangle. A wedge is like this. This is still technically a wedge pattern on the S&P. This is a wedge. All right. This is a wedge. See how it's wedging higher? It's not, you can say it's like this would be an upward sloping wedge, because it's compressing, it's climbing something, and it comes from a key shift in the market, a key reversal like this. Boy, a lot of alerts are going off this morning. So this is a wedge pattern, which you have compression climbing higher without a lot of swings in it. All right. You can say it looks like an upward sloping triangle, but it's not. It's technically a wedge. You have this kind of setup. All right. You have this kind of setup that defines where the wedge starts, the tops and the bottoms are. And then see how it compresses with a directional bias, a strong directional bias. So that's what sets it apart. All right. So, but see, at the apex, there's so many times the apex and triangles can get extended. That's what's so funny. The apex can even get extended. I've gone through over 10,000 of them. And if there was some, I looked, because I'm like, these have to be able to produce something. These have to be able to give me an edge. They don't. If you found an edge, please share it. If somebody's found an edge with triangles, a true edge that you can demonstrate. And that doesn't mean picking out one triangle that worked and said, I was waiting for a breakout to the upside. That's, you know what? You show me the research and everything else. You show me an edge, I'd love to see it. Would love to see it. All right. Thank you for listening to me ramble on. All right, gap is filled in the S&P. Not yet in the NASDAQ. So nothing else changed. Nothing else has really changed. Still looking on the shorter term basis for some kind of, especially right here, maybe there'll be a little buy bounce, but I don't have a setup yet. So with that, I will let everybody go for today. I hope everyone has a wonderful, wonderful trading day. And I'll see you all back tomorrow. Bye for now. Hope this little mini lesson on a couple things made sense. Bye for now.